My dear children, today in this module, we are going to study the important sources of funds. As we know, finance is the lifeblood of every business concern. Business finance refers to the money and the credit employed in the business. It is that aspect of business which is concerned with the arrangement of cash and credit so that business firms may at all times have the means to carry out their operations smoothly. According to B.O. Wheeler, business finance is concerned with the acquisition and utilization of capital funds in meeting the financial needs and overall objectives of a business enterprise. Financing means making money available when it is needed. Thus, business finance may be defined as planning, raising, managing, and controlling all the money and capital funds of any kind used in connection with the business. From the above definition, we can explain the important features of business finance. Business finance includes all the types of capital funds used in the business. Another important feature is business finance is needed in all types of the business, that is, it may be large concern or small concern, manufacturing or trading, and so on. Then another important feature of finance is business finance is a wide term. It involves not only the estimation of the amount of funds but also the source of finance, investment of funds, management of cash, disposal of earnings, and control of funds. Another important feature of business finance is the amount of business finance required differs from one business concern to another depending upon its nature and size. It also varies from one time period to another. Suppose the business concern is a big concern, the requirement of the capital will also high. Then last point is the availability of finance determines the scale of operations of the business. These are the important features of business finance. The capital requirements of the company can be divided into two. They are fixed capital requirement and working capital requirement. Then first one is fixed capital requirement. Fixed capital requirement is the capital requirement for long-term purposes. For example, purchase of machinery, purchase of land, purchase of building, purchase of furniture, and purchase of fixtures. These are the various examples of fixed capital requirements. Fixed assets are the assets which can be used for long-term purposes. Automatically, the amount of capital invested in the fixed capital requirement will also high. Then second one is working capital requirement. Working capital requirement is the capital required for meeting the day-to-day expenses of the company. Can you say what are the important expenses of the company? Yes, salary payment, payment of wages, payment of freight charges, payment of coal, gas, water, then payment of advertisement, that is known as advertisement expenses, printing and stationery expenses, refreshment expenses, bus fare, auto fare, that is conveyance charges, depreciation, rent paid, commission paid, discount allowed, loss on sale of machinery, then any other expenses, that is carriage outwards, excise duty, income tax paid. These are the important expenses of the company. The expense of the company can be divided into two: direct expenses and indirect expenses. The various examples of direct expenses are carriage inwards, freight charges, coal, gas, water expenses, etc. Then various examples of indirect expenses are salary paid, commission paid, advertisement expenses, rent paid, discount allowed, commission allowed, repairs charges, conveyance charges, refreshment charges. These are the various examples of indirect expenses. Then money required for meeting these day-to-day expenses, that capital requirement of the company is known as working capital requirements. By applying one equation, that is current assets minus current liability, that net amount is known as working capital. By applying this formula, we can calculate the amount of working capital. Then current assets are the assets which can be easily convertible into cash. The various examples of current assets are cash balance, bank balance, check, bill receivable, inventory or stock, debtors, prepaid expenses, etc. These assets which can be easily convertible into cash. These type of assets are known as current assets. We can make the payment of the current liability with the help of these current assets. The various examples of current liabilities are creditors, bills payable, outstanding expenses, then income received in advance, short-term loans. Short-term loans means that the loans taken for 1 year. The repayment duration is within 1 year. That means working capital requirement means the capital requirement of the company for meeting the day-to-day expense of the company.